Welcome back to another episode of The Trenches. This is crypto's #1 live stream where we have the most important discussions in crypto, especially those going on at the application layer. My name is Carl Vogel, excited to be here for an incredible conversation called The Case for Collectibles. We have seen tokenized collectibles and everything from whiskey to cards to watches to cars. And I don't, there's certain things that we've seen evolve in this space over the past 4 years that have been truly impactful. And the question we're going to be asking today is, what has worked so far? And really, as a collectibles industry, why should collectibles be on chain in the first place? And where's the industry going to go from here? And so we have two incredible guests who are going to be joining us today, Todd from BAXUS and Tuomas from Collector Crypt. So I'd love for you guys just to give a quick hello to everyone on stream and you talk a little bit about what you're building. Let's keep it to a minute because we're going to dive into a lot of details later, but just kick us off with a quick hello.
Go ahead, Todd. Svi.
All right, cool. Yeah, Svi or Todd from BAXUS, and we bring fine wines and spirits on chain so people can buy, trade, and then eventually drink.
Cool. I'm Tuomas Holmberg, CEO, co-founder, Collector Crypt. We tokenize trading cards for the most part onto chain and let people do a lot of things that they could only do on chain with them. Our goal is essentially to reimagine how collectibles trading will happen in the next century. I think eBay has taken us a few steps forwards, but now they're kind of starting to extract and doing a lot of things that make it hard to enjoy your passion. So we're just trying to reimagine with blockchain as a core infrastructure layer on how collectibles will look like in the next several decades. So thank you.
Terrific. I am so excited. I don't have any I've never been a huge collectible card guy, but I know people that use Collector Crypt and love it. They're playing daily, right? The gotcha game that you guys created. And of course I own whiskey on BAXUS. The only bad part about owning whiskey on BAXUS is I can't drink it right now. But overall, there's much more benefits and I can always drink it if I want to. So
I would say it's also a benefit for value retention purposes.
Oh, completely. There's so many benefits that outweigh it. And yeah, and I can even share some personal stories when we get into it. But I want us to put ourselves back a couple years ago. And when I started first seeing deals for tokenized collectibles on chain, I saw a lot that really revolved around fractionalization as the key benefit. It was, hey, some of these things are really expensive. How do we take this one expensive thing, break it up into 1,000 or 100,000 smaller pieces that basically communities can share and own? And on paper, it looked like a really good thesis. Like, hey, I can't afford to buy something that costs $500,000, but I can break it up into a bunch of different pieces. Perhaps the Constitution that was attempted to be purchased for $42 million is the sort of highest value occasion of this. But nonetheless, we see it across many different categories. And one of the interesting things is that I think both of you are running some of the most successful tokenized collectible platforms. But I don't think fractionalization is yet a core part of the product experience. So, given that you guys have been in the industry for so long looking at this, both as practitioners and now, of course, on the crypto side, why did people start with fractionalization as the first use case? And in your view, why wasn't it successful, at least last cycle, as a major adoption point for users?
So I'll jump first, Tom, and then hand it over. The biggest answer is, as opposed to a lot of crypto stuff early on that was a gray area, fractionalization of assets. And so this is super, super, super important, I think, when you look back in reality on Constitution DAO, was the people token. They were super, super, super clear, was not ownership rights. It was a governance token. And the reason for that is that fractionalization is actually, that is actually SEC regulated. You've actually now created a security. So if you look at platforms like Rally Road, which is Web 2, they do this really, really well, where like I can co-invest, and I've bought copies of the Declaration of Independence or basketball jerseys, or they've done some rare whiskeys and wines. But for every single asset that they put on Rally, you have to actually they have to go through a Reg A process
Mm,
with the SEC and actually create a what is effectively securities. So you actually need a
mm,
registered broker dealer. You can't do after hours trading, like it's an actual security. And so I think that was one of the biggest things. And it was so I'll say, from my experience, I don't know about Tuan, but it was so frustrating at the beginning when we were building BAXUS because we'd go and tell people the idea and they'd be like, "Oh yeah, if you guys do fractionalization, like we'd love to fund this because that's what they saw the promise of crypto." And I'm like,
mm.
"Listen, your crypto exchanges might be able to avoid the SEC, but I promise you, the second that you start issuing fractions of a thing, the SEC will actually come knocking down your door because you've issued a real like flat out security now. Because now you're all investing. Now there were really clever platforms at the beginning. I haven't seen any since that did something that was like co-buying." And so that was super cool because you couldn't transfer your shares of ownership, but you and 10 people could, let's say, buy an NFT together. Where like it was the same way that like I do this with bottles, where my friends and I pool our money and we buy a bottle and then we
Yeah,
might open it
exactly.
up and drink it together. But the fractionalization, I know that was for so many people that was like, oh, we're going to fractionalize, and I'm like, that's super cool, and I'd love to do that if you want to go through the multi-$100,000 $1 million process it takes to get properly legally allowed to actually do those types of fractions.
Yep. So regulatory basically was a big barrier. So you think there was a lot of user demand to be able to participate in ownership of things that are outside one's investment zone as an individual, but it was truly just the platforms didn't feel safe scaling or starting or expanding or couldn't get venture capital dollars because it was like pretty clearly a high risk that the SEC would crack down on this.
I know in our experience we didn't, and we've looked at it, and it's something that very well may be in the pipeline down the road, but we didn't just do it and say, oh, we'll do this and then we'll wait for the SEC to come after us, because they really do come after platforms that are doing that, and they really do impose fines and violations. And there is specifically because there is also a framework to do it. It's not like with crypto where you're like, well, there's no framework. There is an actual framework to do this
There's an
type of
actual
offering.
framework, yeah.
Yeah. So you don't get
Yeah,
that same excuse of just tell us how to do it and we'll do it. It's like, no, we've told you how to do it. Um,
yeah.
one other, actually, I'll let Tom go, and then I'll share some other insights I've had.
Sure. I'll take a slightly harder take against fractionalization. I mean, I think you're absolutely right that the security issues exist and they are real. There were some companies like Fanatics, PWCC, that spent a lot of money like looking at some of the legal issues around it, and they felt that they could still fractionalize it. But I think there's an even deeper issue with fractionalization, right? Just based on our own experience. And, you take a look at platforms like, I guess it was dibs.io, you take a look at Rally Road, you take a look at Collectible, some of these guys that kind of, interacted with fractionalization in a number of different ways. And I was actually called in by a VC to do diligence on
Mm,
dibs back in 21. And I came to the strong conclusion, and that was when I was kind of getting into it. I came to this strong conclusion right then that fractionalization is a real subset of the overall market opportunity for tokenizing collectibles, right? And the reason I say that is, 99.9% of trading in collectibles is for items that are worth less than, say, $3,000, right? And I'm holding like this looks like I just got off the boat from Colombia or something, but I'm holding bags and bags and bags, and these are all cards. Some of these I don't even know what's in here. Let's see if there's anything worth anything. Oh, okay. So this one here is like worth $700, right? But
what is that? Show it up to the camera for us.
okay, so this is a let me open it up. I don't know whose card this is. Well, I have to rip the plastic, so I won't do that.
Yeah,
This is
don't
a
open it. Yeah.
this is a Giratina V from Lost Origin. So this is a Pokemon set from about 3 years ago. This card
Mm,
in a PSA 10 is worth a little bit over $1,000. In a PSA 9, it's worth around $600.
mm,
But the majority of cards that we ship out of our platform, and we've shipped out over 10,000 cards at this point, are cards like this. These are cards
yep.
that people are shipping out and they want to hold them so they could look at it. They can like look at the shine, look at the foil, look
Yep.
at this kind of stuff and have a piece that they can hold. And, fractionalization is an entirely different market than that. And if you take a look at the assets that, I would even say are appropriately fractionalized, you say, okay, well, what about this comic book that's worth $50,000, right? Does it make sense to fractionalize that? And, there were a few examples back in 2021 when I started looking at it. You look at this $50,000, Spider-Man early series comic book, it's trading for $50,000 over here. Once you fractionalize it, it starts trading for $40,000. And, at the surface, you kind of say, well, we fractionalized it and we lost $20,000 in market
Mm.
value. And that has nothing to do with regulatory. That has nothing to do with anything. It's just simply the fact that once you fractionalize it, you lose utility on the item. It becomes more of a financial asset rather than a collectible asset. It becomes something that people want less, right? Because the people who are going to come out and provide exit liquidity for this thing, they don't want it fractionalized. They want to hold it. They want to own it. And then once you have 30,000 tokens out there that represent each a small little fraction, how do you get these guys to coordinate on what they're going to sell it for? Right? If you
Mm.
have some guy who has a portfolio of 100 different comic books or 1,000 different comic books, buying and selling $2 shares at a time, how are you going to get this guy to coordinate to come in and vote on this deal or something, right? And I think Dibs took a really really good shot at it. And the fact is, every high value item they fractionalized destroyed value. And
That's
so I
interesting. You know what's funny is you would almost expect the opposite, where if you look at things again, and maybe I'm equating it to a financial asset, but if you think about stocks, I guess the good part about making it more accessible is you might get better price discovery. Specifically, you have a much larger market that is more liquid, so you actually might get better price discovery than this thing changes hands every 5 years. I guess, and if you look at the stock market, when things have become more available, generally retail gets more excited. It's kind of like a premium if you get retail interest in something versus, let's say, high value collectors. So it's interesting because it kind of breaks the mold of many of the items I've seen go through a process. I don't know if you have any reaction to that, or is that just the way that the collectibles market could work?
I mean, I certainly think equities and the fractionalizing a company ownership and doing that kind of stuff is a little bit different, because nobody in the equity side ever sits there and says, well, part of the utility of this object is for me to be able to go and stick it on my wall, or to get it
Yeah.
shipped to me, or to enjoy it, to show it off to my friends. I'm not going and showing off my 100,000 share certificate of Tesla and saying, look, I was
Yeah.
an investor. you know and I think once you fractionalize it, you basically take out a lot of the people who would be interested in buying it.
Mm.
Because when you are buying one of these items, you're essentially saying, well, I want to buy this, and there's a really good chance I'm going to stick it on my wall. So whenever you buy something at on eBay auction or something, it's an auction mechanism, right? So if you go in and take 30 participants who would have bid on this comic book, and you say this comic book is now fractionalized, and the only thing you could do is buy 30% or 50% of this comic book, and you may not ever be able to ship it to you. You have to convince all these other guys to ship it to you. Um, Once you do that, you say, well, I actually just want to buy it so I could stick it on my wall. The
Mhm.
exit liquidity for these items are whales, people that, are so into the story and so into the narrative around this that they are willing to pay 50,000. So the $40,000 price, I would say, is like the efficient market if you can never stick it on your wall. The
Yep.
$50,000 price is for the people that actually want to stick it on their wall.
And
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 this
whales
is why
probably
this
don't want
is
to, if in these markets whales are setting the prices, then they have a different view. Yeah, they're paying for the instant, I want to sell this, I want to show this, I want to bring it here. They're paying a premium for that to have complete control over the item versus a bunch of different individuals. That's interesting.
So,
Todd, anything to follow up on? Yeah.
yeah, I was actually going to say is that it's interesting, and I don't know specifically, but I actually see the opposite happening. And I also do agree on the efficient market component because, for example, I there's the market price where I know how much I could sell the whole asset for. And so when it came to the fractionalized collectibles, and excuse me, sorry, I use Rally. I love Rally because again, because they give me access to this and to this type of stuff. But I actually use it in that exact way where I'm like, hey, this. Um, historical document, and those are harder to price. But let's say this, you know what I did like for my wife, like this Birkin bag, like we have a lot of shares of like rare Birkin bags that we buy because we're not going to buy the whole thing. But when the impatient people start to sell it below what its actual market price of the whole thing, I look at it as I would rather own shares and know that I have the upside locked in. That now, again, this is why it's regulated because Rally has very specific rules for buyouts and stuff, and like voter share and how many people need
Mm,
to vote. Because you're right, the imagine it's 100 people and you need all 100 shares to do something. Good luck. You're gonna have to hunt down on-chain wallets, try and get them to sell you a share, and the guy's a non,
yep.
or he lost the keys to his wallet. Like, think about that. If you could never actually like sell the entire asset because somebody lost the keys to a wallet and all of a sudden they've lost shares to something and now they can't complete a vote. So like there are rules and regulations to protect for that also. But I actually look at it as like, hey, if you know the Warren Buffett, like, you know, the transfer from the impatient to the patient, if people are willing to sell this for less than the 50K, I'm like, great, there's a 20% upside if I'm just willing to be patient on it. The other actual issue I found was almost the inverse, was that because people were so excited about owning a share, and again, this varies by asset class and which and certain types of things. Like you're right, like having that collectible comic book hanging on your wall, sure. But when it comes to, let's say, wine and spirits and things that are so frequently held anyways in third party storage, call it, let's say, art that's being held in free ports for tax value, you're never going to have it hanging on your wall. So the ability to own a piece of a Picasso only because I'm owning it for the appreciation, because that's really, you're right, it's financialized. It's not really a collectible so much as I know that a collector will want this as a collectible. And I think I'm able to get in at a price that's lower than where it's currently trading as a collectible. And so I want exposure to the asset. But one of the issues that you had was almost the exact opposite with, particularly with Rally, was they did a horizontal of Pappy Van Winkle, like a full lineup from 1 year, and they IPO. Rally's really good at this. The IPO price was really fair. It was like 16K or something, 14K. It was like a really reasonable market value for the IPO price. But so many investors wanted exposure to it that like by the time the shares stopped trading, like the top, like I think the last person to buy the shares like bought at like a $90,000 market cap. They will never see a return on that bottle at a $90,000 market cap because they just wanted exposure to say, oh, I own a piece of,
Yep.
I own part of the Pappy Van Winkle. But it'll take you, I mean, genuinely, I don't think that those bottles, like I mean, like, you know, Bitcoin would have to be $10 million a coin because the dollar has become so devalued for that vertical to be worth $90,000. Now, is it worth 20K and like you get a, you know, a nice markup, like a 20% 100%? There are times when it trades and fluctuates and it could totally be worth, you know, 20K,
Hmm.
25K in the bull market, but it's never going to be worth that $90,000. And so that's the other part I was going to say, Carl, that like the inefficiency comes in is that one of the things that works well in a stock market when it comes to shares is that if the company price, if the market cap goes too high, companies sell more shares because they're like, wait a second, like there's clearly a ton of
Yep.
demand for our company. We can sell and issue more shares into this market that has such an appetite for our company and raise more money to go and buy more things. That doesn't work
Mm,
when you're dealing with an individual asset. So in theory, what would have happened in a purely efficient market was if somebody saw that this Pappy horizontal went up to a 90K market cap, they would have sent 20 more sets of that Pappy to the market and offered them at the 90K market cap or a
yep.
50K and sold more shares into the market of
Yep.
more assets. Um, but you can't do that in this way. So it's one of those weird things that actually, and no one used it because by the time it was rolled out, like NFTs had kind of died. But
Yeah.
the NFT 404 standard is actually really interesting in this capacity, as far as the ability to actually discover market pricing and kind of tokens. If you look at tokens as like shares or like the memification, like with those things, because let's say you took a, you know, whatever, $50,000 comic, Tuam, to your point, like that's a PSA 9 or something. Um, that's a PSA 9, but there's another, you know, PSA tells you how many of the rest of them exist in the market. So the idea is like if somebody could continuously send in more PSA 9s to sell into that market. So if you had an order book and it's like I'm willing to spend up to a $40,000 market cap or up to a $50,000 market cap or a $60,000 market cap on this comic book, more people who have them will say, great, I'm going to send one in and I'm going to fractionalize mine at a $60,000 market cap and sell more shares
Yeah.
into the market. So that's where I think the inefficiency came, is that you actually, and Twum, to a perfect example, super collectible items might trade at a discount because I will never have the ability to stick it up on my wall. But the savvy collectible investor, so to speak, who understands that there are whales out there who want to buy these things, will look at that pricing mismatch and say, I'll buy as many shares as possible at 40K, knowing that, and Rally does this, they have exits. They receive offers on things. Like they've done this before, a Michael Jordan rookie card, or like I'm trying to think of some of the assets I've been in where I've bought post IPO after a pretty big dip in the price. And then they get a buyout offer that's above the market, above that market cap. And so I end up, making some money on it. So
It's
I think
interesting.
that
Yeah.
so I use it as a value investor and say, great, where can I buy things that are trading below market? And then I look at other things like to Tuom's point, things that are trading now below where the fair market value is. And I'm like, great, I'm going to buy this because a whale is out there who will make an offer he's like, hey, this is worth 50K, or I'd have to buy this for 50K at an auction, plus a 25-30% buyer's premium. Or I'm buying a card on Collector that's selling for 10K, but the fractions are trading at only 8K or whatever. I'm going to buy this because somebody will come on and make an offer, but you need a system that governs how you do a buyout in the same way you do with a company. Like if a public company is trading and they want to take it private, like there's a whole like you have to go to the shareholder vote and the board has there's
Yep.
a whole bunch of rules and regulations. So it's almost like that's part of the other issue with collectibles is that like if people want exposure, the market cap can go too high because they just want exposure to the asset, but it'll never actually achieve that price. And if people are impatient, to Tuom's point, it'll trade, or it's a collectible that the real buyer is someone who wants to display it. It's something that you want to own to display on your wall, like a really cool comic or series of like graded cards. You're then it'll sell at a discount because the guy who actually wants it doesn't know how long it'll take them to acquire enough shares to be able to make that buyout offer.
Yeah. So I think this is a good point. And by the way, I think we're pretty close to squaring the circle, but I think let's, for the sake of time, kind of up level to the next question, which is like, what is the thesis for tokenized collectibles? And kind of the point you brought up, Tuom, if I own a whiskey or I own a card, unless I untokenize it and take physical delivery, I can't put it on my wall. I mean, maybe I can do a photo frame and have a kind of experience, but it's not the same look, touch, feel. So for a lot of these categories, people are like, well, why would I do that? I want to hold it. Um, Obviously, there's reasons for tokenizing: better financial markets, better security, all sorts of things. But maybe just maybe Tuom, you want to start with the thesis for tokenized collectibles.
Yeah, absolutely. And I think brief history lesson, like back in the 90s when eBay first came out, it was revolutionary because for the first time, and I had dealt even before eBay, I was on America Online in like a chat room, and people would like send up a text message with, here's the 5 cards I want to sell, and you know do your offer, and you'd offer in chat, just kind of like a bulletin board, kind of like auction
Yep.
system. Right, I remember those days, and that was revolutionary because other than that, you'd have to go to meetups, you'd have to go to swap meets, you'd have to go to,
I still remember my SSN from AOL. I think it was D-Man at B-Ball 88. I'm pretty sure that was, everyone remembers, I feel like, their first AOL screen name. It was a pretty monumental moment.
Yeah, mine was pretty cool. It was Drool, Drool, Drool at AOL.com.
That's early.
Yeah,
That's
no,
early to be able to
I
get
was
that.
super early. But
Yeah.
so I was there, bidding on these like, text-based auction things, and then eBay came out, and it was kind of like, text-based auction, there's a lot of manipulation you could do, right? If you're the seller or the buyer, but at that point, it was all internet nerds, so they weren't really trying to hustle each other. eBay came out and kind of institutionalized that system and made it so that these people could actually have a third-party framework to manage that auction and manage kind of like how that value is going to be sent back and forth, which I thought was really cool.
Hmm.
And eBay kind of like has grown to the behemoth that it is right now. Basically controls like 30%, 40% of the trading card volume, which is phenomenal. There's like 25-30 billion dollars worth of trading cards that are traded every year, and eBay controls like 1/3 of it. Um, but at the same time, as a corporate entity, their goal is to maximize profits and to inhibit competition. And so what that's resulted in with their kind of, and I'm not saying they're a monopoly, they're not, but they
Yeah.
have kind of monopolistic tendencies towards extracting as much as they can from their user base, towards inhibiting any type of competition. And they've done this not only to other people, but to even us as well. Like we're struggling to like live in the eBay kind of like
Hmm.
world. Um, and I think tokenizing collectibles is kind of like You could think of it like guerrilla warfare. What are all the issues that people have on eBay, and can we use blockchain and tokenization to solve them? And some of the biggest issues revolve around fraud, right? And fraud can be very simple. It could be like, I won this card, ship me this other card, or ship me the wrong card. Okay,
Yep.
then it's he says, she says, who wins? You don't
Yep.
know what happens, and eBay usually sides with the buyer. But a lot of buyers, they go there, they create a new account, they'll grift somebody for $30, and then they'll create a new account after, right? So that
Yep.
it's just part of the cost of the system. And then you have, soft fraud, which is insidious, right? Like you could take a card that, you take an image of a card and the card has a little scratch on it, and you go in and stick it into Photoshop and you kind of like get rid of that
Mm,
scratch. And now you sell it, and then the person receives it and they say, well, here's what I received. It has a scratch on it. Where'd that come from? And then you say, well, it must have been when you opened the package, or it must have been something,
yep.
right? And this is what happens every single day. And so there's fraud that is, intractable from the system. There's also settlement, right? So
Yep.
settlement, let's say if there's a big football game on Sunday and you have two teams that are fighting to get into the Super Bowl, like whichever team wins will be in the Super Bowl, and both teams have a bunch of rookie players, right? What a lot of people do is they'll go in and buy a lot of cards on eBay from both teams. They'll say, I'm going to buy all the rookie players from Team A, all the rookie players from Team B. I'm going to do that on Saturday. The game is on Sunday. The game goes through. Whichever team wins, I'll settle those transactions and I'll renege on all the losing
Mm,
team transactions, right? So you have this kind of asynchronous settlement issue that happens on these Web2 marketplaces, whether it be through credit card, canceling credit card payments, whether it be through like, oh, you have like Fanatics gives you 7 days to submit a payment. So your time window to even
yeah. Wow.
submit
That's a
the
long
payment
time.
is 7 days, right? So there's a lot of fraud that happens through settlement, and a lot of like, missed opportunities. And then, finally, like, one of our biggest use cases, we have people all over the world and they want to bid on items on eBay, right? They want to bid on items on Fanatics, but they're in mainland China. They can't get an account on
Mm,
Fanatics to bid on higher level items, right? So they're limited. And then two, whatever they pay, they're going through like this 6% foreign exchange, issue,
yep.
right? So whatever somebody buys a card on eBay from China, they're paying 6% foreign exchange. They're paying like $40 per card to ship. That card's getting stuck in customs for 2 months and all this kind of stuff. And if there was just a way to like buy something, instant settlement, zero fees, zero fraud, right? That's a way to kind of reimagine how people globally can interact with the collectibles ecosystem. And yeah, I'm picking extreme cases. I'm picking China and this kind of stuff. But even in the United States, right, you have people all around the country that are dealing with chargebacks, returns, fraud, settlement issues, all of these kind of things. And in blockchain, because it's enables one person to settle a transaction instantaneously
Yep.
and not have any way to go in and say, well, no, you didn't do it, or I messed up, or this kind of stuff. That just, it's like somebody like farted in the shower, and you just are able to get rid of all that stuff. we're,
Yeah.
we're all living in a world right now in Web 2 with a miasma, and we're all used to it, and blockchain can clear that out, and that's
Yeah.
why I'm so excited about it.
No, I love that. So, like, just to summarize here, fraud is a big reason, settlement times, and let's say reducing arbitrage. Like, essentially, it's like MEV kind of is going on in the traditional world. It's how do I reduce bad MEV in this case, and we're around settlement, and then enabling access. I know those are three great ones. I think really summarized well. I know Todd. Maybe to add on that. I know you're also looking at more of like the financial derivative space and other things. So maybe expand beyond that into some of the things that you also see and out on the 12.
Yeah, I mean his points were spot on. So the fraud is obviously a major one. It's
Yep.
something that I've experienced, even through. So one of them is fraud. One of them is the speed of settlement is I think a big one. And Tuan touched upon this, but it's the knowing that you're selling and getting paid with that instantaneity enables more velocity of trading and more capital to flow. One of the things that we see, like why everyone says in crypto exchanges are such great businesses, is because somebody has a win in one coin or one token or one whatever. I mean, Pump is a perfect example of this.
Yeah.
And
Yeah.
they immediately roll that into another token or another play versus
Yeah.
great, your sale will settle and you'll be paid in 14 to 35 days after close.
Yeah.
Great. Well, that money's now locked, and whoever the intermediary, and in the whiskey case, it's auction houses. They're actually just sitting there earning float on your money. Like that's what they do. That's literally part of their business model. Is
Yeah.
we sell your stuff, we get paid 30 to 60 days later, we pay you out. We're going to earn all the interest or whatever it is on your money while you're sitting there waiting.
Yep.
So there's the velocity component. And then the other part, which is again in the financialization, the derivatives, which I think plays into it, and something that we're definitely focused on is all of the beauty of DeFi, like the idea that you can use on-chain assets for loans and collateralization, and to be able to create more opportunities with them is something that really is hard to do in the traditional world. Like I don't know how it works in the collectibles, card, and comic book world. It might exist already, but again, I'd imagine it's somewhat niche for people who are willing to underwrite loans against cards or collectibles. What's really cool about the DeFi component, we work with Loopscale on this, is like people are taking their bottles on BAXUS and going onto Loopscale and securing loans against their bottles, which then again gives them either more buying power on BAXUS or more opportunity to go and deploy that capital into other types of on-chain opportunities. And again, that's something that you can't do when somebody's bottle is sitting in their house, because it's like, well, how the hell do I know that my collateral is safe or that it even exists, or that it's real? And then you have the derivative side of things, which is, okay, well, once you have enough volume and velocity that's transparent and public, where I can actually underwrite the value of this data, where I know that it's not, basically scamming up or being pumped and dumped or being private, like, what you see in auction houses where like there's some suspicious sales and you're like, what the hell is happening here? And you can't really verify because only the auction house knows the back end transactions or spoofing of sales. Once you're able to kind of eliminate that risk, you can start to get a lot new outside capital, which might not be the same passionate collectors who are like, oh, I really care about this bottle of whiskey, or I really care about this card. But they have enough data to start building financial models and underwriting and creating financial, again, whether it's derivatives and like betting markets of like, or sorry, what did we rename gambling to? Prediction markets, right? That's
Prediction
how we've
markets.
rebranded, right? That's how we've rebranded gambling.
Yeah.
So whether it's prediction markets on price movements on like entire bundles of like, I think, bourbon or wine from this vintage or whatever, across the board, down to even things like, I mentioned wine, but like wine futures is a business that has existed for forever. I mean, 100 plus years. And what it basically is that wineries harvest the grapes from a particular vintage. It goes into, they harvest the grapes, produce the wine. It goes into a barrel to age for a certain amount of time. Then it continues to age in bottles on the lees. And then it's finally sold into the market. Now, the wineries, in order to keep their business going, sell off basically the value of those bottles of wine let's say in Bordeaux, to negociants, which are these, middlemen houses that basically take on that financial risk. The middlemen don't want to sit on pure financial risk. They know that people are going to want to buy these bottles when they're actually bottled and distributed. And so they sell wine futures basically to, importers that then sell it to liquor stores that sell it to their customers. Now that works great in theory, but there was a pretty big case in New York City where a certain liquor store that was a very, very big store with a ton of history and reputation sold millions of dollars of wine futures to their customers. But when the time came around to actually buy the bottles from the importers who finally got them 6 years later, that store had been like, had no cash left. They had been spending their cash, the owners willy-nilly. And so, well, the only proof of ownership of those wine futures belonged to the store. The importers don't care that you paid the store for them, so those people end up never getting their bottles, even though they paid for them 6 years up front, because that provenance, the proof of ownership of that future, sits between 3, 4, 5 different intermediary parties. And so the ability to also do production and futures and things like that, and to eliminate as many of the middlemen as possible. Imagine if let's say you still keep the negociants because they're a critical piece and component to the entirety of the Bordeaux economy. Let's say the negociants were instead able to sell it directly to consumers with like an on-chain or a tokenized future. And then you knew, in the way that oil futures trade, like there is a port in which the oil settles, and that's when you actually have to take delivery, was that they could use a BAXUS, for example, to take delivery. Or in the case of, I know it's different, but let's say in the case of like trading cards, I'm a big Magic the Gathering fan. So,
Yep.
and I haven't bought in years, but then I started to buy, and I'll actually talk about the cool thing I did on Collector after. But I'm able to then, I know what the releases are going to be later this year. They tell you what the later year release is, but same thing. I have to wait for it to be distributed, go to my card shop, buy it. And then you have people right now selling things to Tuomas' point, on eBay that they do not own. They literally cannot own it because like it hasn't been released yet, but they're selling it and then saying it will ship in 6 to 8 months when the thing gets released because it's a card broker who
Mm.
knows that they'll be able to get sets of it. But let's say, and again, this has happened before to Tom's point, well, all of a sudden it gets released, and for whatever reason, that set skyrockets to it was they sell it to you for 500, but then the market value is $2,000. They're just going to renege on the deal. This has happened to me before on StockX, where like I bought a pair of sneakers that again I wasn't buying them to flip them. I wanted the shoes, and I missed the Nike drop, and then the price skyrocketed on them. And so the guy who was supposed to send them to me just never shipped them because he's like, oh,
Yeah,
okay, great.
exactly.
And like,
Yeah.
and let's say StockX even banned his account, no problem. He spins up another one, like he Sybiled it, and he spins up another account or he sells it from his friend's account because there's no incentive for them to actually honor those agreements if there's a, again, if there's that much financial upside. So the finality is a very big one. The again, the speed and the velocity of trading, the financialization. But one last point, which is super cool, is like I mentioned, I'm a big Magic the Gathering fan. Collector did a super cool thing with the artist from Galactic Geckos had actually designed some cards for Magic the Gathering.
Mm.
And oh, sweet, do you have them? And Twom and they were able to do with Collector Crypt, like they got the artist proofs. So these were all the stuff that like gets submitted and like gets sent back to the artist before it actually gets live and printed as a card.
Oh, awesome.
Come on,
So
camera. There we go.
there you go. So I got the Mind
Oh, that's
Slavers. I
cool.
didn't get any of those, but those are the artist proofs, like holographic, signed. Yeah, exactly. Like signed by him. Like they're not playing cards. You don't play with these on the actual thing. Now I missed those opportunities to buy them on the drop because I wasn't holding the right tokens or whatever it was. But I bought a couple of them on the open market. But then, oh, what's his name? Dang, I'm forgetting. But
This one has
one of the guys from I'm blanking on his name right now. From Helios, Ichigo from Helios, had one of the cards, and I posted like, "Does anyone have this card? I want to trade for it." And so I traded him bottles of whiskey on BAXUS. And this is again the beauty of the on-chain component is that because of that composability and the proof of ownership, he traded me his card on chain for my bottles of whiskey on BAXUS on chain. So he knew that he actually had the bottles, and I knew that I had the card. My cards are sitting safely in the collector vault.
Yeah.
His bottles are sitting safely in the BAXUS vault, and so that's one element that I think isn't really looked at enough. Also, that on-chain really enables is call it quote unquote the barter economy. That like you
Yeah.
can also remove finances as the intermediary, as opposed to in the past where if he wanted this bottle, he would have had to sell the card somewhere, wait for the funds to come in, and then go and buy the bottle. I, as the owner of this thing, can now swap with him, the owner of this other thing, which are in totally separate asset classes. They're in totally separate asset classes. Um, there's no platform that is both the trading cards and whiskey, but we could do that swap because all we needed was, the proof that both things owned from the on-chain perspective. And so that is also like something that is enabled over here is, and especially as it expands, I'm a collector of many, many things. And I know people who do these weird deals all the time, like a bunch of whiskey or wine that they'll trade for a watch. Well, okay, again, you need that. They'll go through third-party trusted intermediaries. These things take time to do, as opposed to if
Yeah.
you really have all of these things that are vaulted and owned and controlled, and like you have that provenance and that trust, you can now turn those into instant swaps and trades for, again, totally unrelated physical objects that otherwise you'd have a very difficult time finding an intermediary who's willing to take on that third
Yeah.
party risk.
Wow. Well, I think we should write a thesis on this because I think that was the most comprehensive overview, touching everything from fraud to settlement to financial derivatives to price oracles to cross asset bartering. I think this actually has inspired me to write a thesis piece and add a bunch of co-authors on it. It's pretty exciting. What do we have to do? Well, I guess there's two questions at least I want to get to with the time we have left, if not three. So let's see if we can get through all three. What you guys both got into this, I feel, not because you saw crypto as an opportunity, because you're both deeply passionate about the areas you've focused and you've spent decades in these fields and then said, oh, crypto can make this radically better. But you're not crypto people that said, hey, I want to go tokenize some collectibles. What collectible should I go find? Oh, this looks like a good category. But I am curious, what are some of those what makes a category ripe for tokenization versus something that makes it perhaps not as beneficial to tokenize? Is there any heuristics or attributes that you would consider around that?
Yeah, great question. And I've had some lively conversations with people in crypto, out of crypto, very famous venture capitalists and so on about this. I think
I know the famous venture capitalist. It was Carl Vogel that you were talking to.
it was, but I don't think we ever
Yeah.
got into an argument. I've been in an argument with other famous venture capitalists about what's a good asset, but I think in my perspective, right, the Web 2 side for this collectible has to be figured out, right, and in our case. Oh, it has to either be figured out or you have to be able to bring technology to the table to solve it. And in our case, we talk about, these slabs, and these slabs, they've all been kind of sent to Santa Ana, which is, hour north of me, sent to a company. This one in particular is PSA. You've had a grader come in here. They authenticate the card. They go and see, well, is this card, has it been through a dumpster? What is the quality? Let's go in and put some factual information based on my professional assessment of this card.
Yep.
And now, when you go and trade this card, you can go in and do this, right? You don't need to see the card. You just need to see the label.
Yep.
And you know which card it is. You know what the quality is. You know that the grading company is PSA. You know that you can look up the cert number and see if the card is been faked or whatever. You can look at even the trade history on the card and see, okay, this was sold on eBay 2 years ago for this price, and this card is sonically welded, right? So this case here is welded on all four sides. It's waterproof. If I twist it like this pretty hard, the whole thing is going to crack, right? So it's not meant to be like a robust, perfectly suited, protector. It's meant to be a proof of authenticity and a proof of quality, right? Because if it was like very hard to break, if it was very hard, then somebody could come in here with like a very, very thin knife potentially and pull the card out or pull the label
Hmm.
out, replace the label with something else. So
Yeah.
it's meant to break, right? If
So is
it's
this
tampered
leading to
with.
grading? Is this like items that are good have for tokenization have a clear grading structure or sort of
They
standards around
they
quality?
have they have standardization around authenticity as well as around quality,
Yep.
right? Because in order to be able to allow somebody in South Africa to buy an item from somebody in New Zealand, they need to be able to determine the value of that item based on data, based on data that you could turn into numbers and letters
Yep.
and stick on the blockchain and let people read those numbers and letters and say, okay, I know what I'm getting here, and be done by a trusted authority, right? So PSA has been in business for like 2 decades. You have BGS and CGC who've been around for a long time as well. And these are all generally accepted. A lot of people try to start new grading companies, and new grading companies, like let's say ABC, right? ABC company, they could look at this and say, well, this is also an ABC 8. So they could agree with PSA's assessment. ABC 8 will probably trade at a 30-50% discount to a
Yep.
PSA 8 because
Yep.
people are like, I don't know what this is, right?
Yep.
So you need to have this professional third party assessment of authenticity and quality.
Yep.
And you also need to have a small form factor, right? Something that
Mm.
is small, that is easy to store, that is not too expensive. If you could solve these kind of pieces, being able to vault, being able to authenticate, and having that be a trusted kind of metric that's used throughout the ecosystem. If you pull that together, that, in my opinion, is a good,
Mm.
thing for for tokenization. Other things that are
Interesting.
in kind of our realm, and I'll get to my opinion on SV and BAXUS in a sec. Other things that are in my realm that are very simple, kind of low hanging tree fruit, are coins and stamps, comic books, video games, and then kind of the next layer, which is a little bit harder, are things like sneakers and watches and so on. Where I think, Todd has kind of come at the same problem, or Svi's coming at the same problem from a different angle, is that I think Svi recognizes that there is a lack of these professional grading kind of companies for spirits and wines. And there is a lot of fraud in spirits and wines. Like,
Yep.
I could tell you stories about sommeliers that I know that recork stuff and sell a $300 bottle for $50. I mean, a
Oh my
$50 bottle
gosh.
for $300 all the time, right? And they just pocket it. This
Yep.
happens at restaurants all over the country all the time, right? So there's a significant need for authenticity. And I think BAXUS has done a phenomenal job at developing tools and technology to kind of go and address that side, right? So it would be awesome, like 10 years from now, if we're coming in to have a conversation and say, well, BAXUS is the standard for authenticity and quality of these items, and we are only going to drink this wine at this restaurant in New York City if it has been authenticated in this way, right? So
Yeah.
I think there's tremendous value in both sides, but like the low hanging fruit, I think like we for collector crypt, this has already been done and it's recognized throughout the ecosystem, so it's fairly easy for us. So I'll stop
Yeah.
there.
That makes sense. That's super helpful. So, authenticity, ability to assess quality, and the ability to vault are kind of three of the core pillars that make something a terrific. I mean, so to your point, cars would be really hard. There's really no standard way to assess the quality of a motor. There's vaulting them is expensive. Uh, that would be a much harder asset class to tokenize.
I think it's a heavier lift. I think it's possible to do it. I mean, we have ideas, always ideas, but you could imagine like you have very wealthy people sticking their Bugattis on airplanes and flying them around the world to race at racetracks.
Yep.
So why not just leave the cars at the racetrack? And here comes fractionalization. You could fractionalize the car that's sitting in a garage at a racetrack, make 100, tokens, and whoever owns the token could come in and say, "Here's my token. I own this car, and here's $500 to spend for whatever wear and maintenance. I'm going to drive the car around the track."
Yep.
I think there's business models and cases to be made for cars, but I think again it's not at the it's not at the frothy layer. It's not at the cream layer of what is just
Yep.
like super obvious.
Yep.
Yeah, I think all those are spot on. And again, to your point, like I wish that there was just a PSA, so to speak, for wines or spirits, like especially when we got started. There isn't, which is why we have to handle our process the exact way that we do, where BAXUS actually undertakes the 360 scanning. Like we effectively have made, to your point, exactly, we've made the PSA basically for the wine and spirits with a 360-degree scan. We haven't started to ascribe a numerical grade to it yet. It's something that we've discussed and put into the works, but again, it requires us to determine what those standards are. But by doing the 360-degree scan, we make it very possible. Any buyer who comes on sees what it is that they're buying. So, like, they see the
Yep.
condition report and can say the label is slightly torn here. There's some tearing on the foil. All of those components, we've made it visible so that the buyers know exactly what it is that they're getting, that based on what they want to get. And they then get to make offers if they think that the price is listed as too high, because again, the sellers do set the price. So it's a very good call on that regard. Another thing that I think is important, to kind of your point about the frothiness, and two things. One is it needs to be something that is being traded frequently, that there's actually demand on the buy and sell side. Because let's say, for example, you were to tokenize really, really, really valuable art. Again, that market works already, so to speak, with these free ports, with people just owning things that they never see on their wall for tax purposes, where they're holding it as an asset. And the value might there work as like a digital deed of ownership. Like I could see that again for DeFi purposes. But part of what you also have with a lot of those assets is, and I'm not, they're owned by like a series of shell corp. Like the person who owns it also doesn't necessarily want to reveal that they own it. Like going through a loan process will
Yeah.
probably involve some sort of KYC and AML. They might not want to undertake that process. And so instead, these are done with backdoor cash deals already, where like I'll loan it against you because I'm also a member at the same free port and they can verify that you own, like they're used to that secrecy. So I don't know that those are the best things to bring on chain per se, because the speed and the anonymity of on chain also warrants itself to different types of benefits that don't necessarily work for some of these larger or more historic markets. One reason why I think there's been a couple of people that have attempted watches, there's a couple of more that are still doing it, but one of the reasons I've heard actually that watches don't work well, um, and Tuam, this goes to your point about the authenticity, is you can have all of the original certificates of authenticity from a watch. You can have everything. But I know someone who used to run a platform that was similar to like a rent the runway for watches. Like you could basically rent watches and
Mm.
send them back. And what they described the issue was, is every time a watch came back in, the watchmaker who worked for the company had to take it apart and re-examine, because one of the things you could have is the original card, the original ownership on a Rolex, and then as soon as you get it, you then take out the Rolex movement and replace it with a cheap movement, because you can then use that Rolex movement on another watch. So you actually like, it's different than a, again, a bottle of whiskey that if somebody redeems it from BAXUS or goes out, it's like, again, we do the 360, we know how to scan and inspect it to see whether it's the original, or a PSA graded card where, okay, as long as they haven't cracked the slab and the cert number is the same, we know that this is the same card that we sent out last time. With watches, you actually have to inspect, like, okay, the person borrowed it, did they ding it up? Like the assumption is if they buy it and wear it, then they've actually worn it. Like, is it in the
Yep.
same condition it was, unworn or new or whatever, that it went out in? And the other thing I've heard about watches in particular, now sneakers I think are actually different, because most of the sneakerheads I know are not wearing the sneakers. They're buying them just to have them and own
Just to
them
have you.
for that. So, but with watches, the collectors I know wear the watches they own, even if they're going to sell them later. Part of the nice thing about being a watch collector versus a bottle of whiskey is as soon as I open that whiskey and get the utility, like, the value's gone. I can't resell it now. Now with watches, I can buy a watch, wear it, enjoy it, and then still sell it into the market. And the idea is that, you take really high res photos so people can see all the damage. And, you should have it inspected when you buy a watch from a third party or from a site if you don't know and it can't be trusted necessarily or whatever. But that becomes, again, that same intermediary layer, which means that to run a purely on-chain platform, like, you're going to have so many people, the second they buy the watch, they're going to want to redeem it, and then they're going to have to go through that same process when they want to sell it again, of shipping it back to you and
Yep.
restarting that entire process. Because the utility is actually, it's a, to Tuom's point, sometimes it's having it on your wall. In the case of a watch, it's having it on your wrist. So unless you're buying it explicitly as a long-term value appreciation asset, it's more difficult. Now, one of the things that makes wine and spirits also interesting is that they are traded heavily. There's a lot of that volume and velocity of trading, and people that are looking for it. B, there's really, really inefficient distribution. And so that's something else that makes something ripe for
Mm.
tokenization and for tokenized markets, is that, like, to Tuom's point, somebody in mainland China might want to buy something that isn't available in China. Now, they might be comfortable. We had this, BAXUS did the Lehman Brothers drop, and we had a guy who lives in New Zealand who bought the token, didn't want to pay all the crazy shipping fees when he was going to have it shipped to New Zealand. But when he came into New York for Accelerate, he just redeemed his bottle, got it dropped off in New York City, and he packed it in his luggage and he brought it back
Yep.
with him. So it created that proof of ownership, the ability to secure ownership of something in a much faster and more efficient way, that didn't then cut in and basically, wreck his like ability, like lose all of the value proposition just from paying all the shipping costs and the imports and the tariffs and the duties. So there's that element also.
Yep.
And wine and spirits, for the most part, this really, with wine, spirits was something that we kind of brought to the table. It wasn't as frequent, but they're frequently stored in third-party storage anyways. So you're not used to, like,
Mm.
people who have massive homes have like huge wine cellars, but you talk to a lot of people, even big wine collectors in New York City, they have a wine fridge in their apartment that they might keep some of their favorite bottles that they want to pop open. But these people are sitting on thousands of bottles that are always being stored at some third-party storage warehouse where they don't have that instant ability to redeem it anyways, and they definitely don't have the instant ability to sell it. Like, that part takes months and months or weeks at
Yep.
least in the process. So these are things that we're looking to optimize again in that way. It's like, I think that's the other thing. So it has to be something that people want to trade somewhat frequently. It has to definitely be something that they're comfortable storing, because yes, some people might want to redeem. I don't know what necessarily, again, what you see on collector as far as the number of redemptions versus the people that list it and then own it and then relist it later and trade it. And you also need it to be that the process for intake and authentication can be done. Yes, it takes time on BAXUS, but we figured out ways to actually speed that up, versus a watch where you have to take apart every single piece. Or to your point, Tuom and Carl,
Yep.
about cars. When these cars go to auction, they've gone through, the reason that they're so expensive is because they've gone through a massive, massive inspection of, like, if you're selling an original 1960s Ferrari, somebody's inspecting to make sure that all of the engine parts are OEM original Ferrari, that you didn't just patch it up yourself and throw stuff on it. And that becomes a tremendous amount of work for a company that's going to do this, like,
Yeah.
on chain. And if it's just going to sell once and then have to be shipped out, then you've just recreated almost the same process that an auction house does. Faster settlement, anti-fraud, yes, but to Tom's point, like there are certain assets that definitely are more ripe for what I'll call like the timeshare model, meaning less the
Yeah.
the fractional ownership, however you want to describe it, but like we all own a piece of this car or an apartment that we can all use, and then if it does sell, we all get to we split up the value of it. Um, but that's it also.
Yeah, no, that makes sense. Wow, there is so much more to discuss. I know we're basically at time. So maybe the final thing we can just quickly look at is what is it going to take to get more users on chain? Like I think arguably both of you are leaders in your field already onboarding tens, if not hundreds of thousands, if not millions of users onto your respective platforms. But where this gets interesting is, sometimes on YouTube, I see these guys walking around the New York watch district and they're like selling watches, flipping watches. It's kind of fun to watch them. And so I think the traditional industries have, certain creators have found these industries and created content that make people and retail more interested. I'm curious what you see as things that are required to get more retail involved? And particularly, do you think it's easier to get existing collectors to migrate platforms, or is it almost easier to get brand new users who haven't been collectors to start collecting these items in a tokenized way?
Yeah. So what we've found, changing consumer behavior is obviously always difficult, but but it's more difficult to convince someone to get into a net new product than it is to just convince someone to do something in a slightly different way that they've done it, especially if you make it as comfortable as you have. And so Collector does this the same way that BAXUS does, in the sense of you create an account, you log in using your email. Like you don't have to necessarily do all these like complicated third-party wallet setups. You can pay with a credit card. So like whiskey collectors, like as far as again the people that have come on chain, the easiest way to get people on chain is for them to not have to know that they're actually going on chain. Um, and I think this is one of the areas that a lot of early crypto products have failed at, was that they were focusing so much on the on chain and blockchain and the this, um, that they didn't um, know entirely what they were doing, basically.
Yep.
Um,
Yeah, because they might be
like
worried
and
about, hey, if I create a wallet, am I going to remember this phrase and am I going to lose my $10,000 asset? Right.
yeah, exactly. And so that for us is like such is I think really the most important component for them, is like to make it really comfortable. And so the question then I think becomes almost to flip the question when it comes to bringing users on chain is what do we mean by that? Like, not every user is going to come on chain to gamble. Like, not that, they will come on chain when it means, and we've seen this with BAXUS, when it means that by funding their accounts with USDC, they're saving 4.5% credit card fees. We are seeing that happening.
Of
So the
course.
efficiencies have to make their lives actually easier and better, versus like jump through all of these hoops for something that that isn't actually going to get you anywhere.
Yep. So make it easy. So it's easier to target existing collectors and just create a stellar product experience that's usable and provides them great selection. I mean, at the end of the day, that's key, is that if there's not great whiskey or there's not great cards, they're never going to migrate. So you have to have the good content, the good cards in order to make that happen. Tom, what else
Yep.
would you add on how do we expand, 10x the card market or tokenize collectibles more broadly?
Yeah, I agree with everything Svi said about kind of that experience to abstract away the blockchain, because whether we like it or not, there's a lot of people out there who remember the headlines from all the rug pulls and all people getting
Hmm.
wrecked, and that all these thefts and everything, and they have a negative kind of like taste in their mouth when they think about, oh, I'm on blockchain now, and I just remember this big story on CNBC about some guy losing hundreds of millions of dollars, right? So that is a real thing that we have to overcome. um, I think we've tried a number of different like Web2 on ramps, and frankly I just haven't been um, you know I don't think it's as easy to use a Web2 on ramp as it is to go to like Amazon or go to eBay
Mm,
and replicate that kind of user experience. And so what we've done, and we're gonna push something here in the next few weeks that'll be another attempt. But what we've done is we initially had a wallet abstraction and credit card payments and that kind of stuff, and that was last year, and
yep.
people were using it. But the funny thing was that people in our platform, the ones that were crypto native would go into our chat and say, well, look at all this cool stuff I'm doing with the collector crypt card. I'm doing this, I'm doing this, I'm doing this. I'm trading it over here. I'm
Yeah.
listing it on Magic Eden. I'm doing raffles over here on Famous. I'm doing all this kind of stuff. And then, these guys who are on their Web2 wallets are like, how do I do that? I want to play too. I want to have fun in this way. And, the only answer we could give them is, oh, here's a link. Here's how you pull out your private key. Here's how you go to Phantom and create your own wallet to be able to do all this
Yeah.
cool stuff. Right. And so I think, yes, you can create a sandbox on your platform that has a pretty nice, Web2 on-ramp. It's not perfect. It's pretty nice. I think BAXUS has done it incredibly well. But, until the Phantoms, MetaMask, Coinbase, until these guys are willing to work together to kind of like say, well, here's how a seamless experience will work. I think we're always going to be at a disadvantage to Web2. And, I am not confident yet that, and like I said, we're going to do some experiments here in the next few months, but I'm not confident yet that if we put money into marketing and advertising to Web2 audiences, that they'll be able to come and jump through kind of the user experience to get on the
Yeah.
platform and say, wow, this was absolutely amazing, right? I
Yep.
never thought, and have it be like, oh, this is totally not a crypto experience, and this looks just like buying stuff on Amazon, right? I don't think we're there yet, and it's going to require coordination between the guys that really generate the wallets that are accepted throughout these platforms. It's going to require payment processors to not do ridiculous stuff like some of the big guys, they charge like 7 or 8% on credit card
Yeah, that's
payment,
ridiculous.
and you just can't run an efficient business, and so I don't know what the answer is, but I'm honestly surprised that Solana Foundation and some of these big entities aren't doing more. Like Solana Foundation is doing a lot of stuff in a lot of different pools, but their number one priority should be getting wallets, payment processors, getting these guys in a room together to say, here's how we do a seamless UX, because everybody's talking about onboarding the next billion people onto crypto. But if you can't do better than Web2, and if it feels like crypto, people are just going to not do it. And so I think TLDR, the people leading these chains, the people leading the big payment processing platforms and the wallets need to sit in a room, talk to people like us, talk to people like BAXUS, who are actually interacting a lot with the real world, and say, what does this experience need to look like, and how do we solve these problems? Because I don't think we're there yet.
Yeah, it's fun. Actually, on a separate episode, I talked about how foundations, I feel like have not. I feel like if you think, hey, you have an entity that has billions of dollars, how effective is it? I would say there's a lot lacking in the way foundations are run, and relative to the type of impact that they could create with massive stores of assets that they could deploy and use. So I agree with you. Well, look, we're basically out of time. Unfortunately, I would love to keep talking about this. I feel like an hour is never long enough, but at least I get the conversation started. But I feel like so far this was the first canonical conversation on tokenized collectibles I've ever seen. So I'm really excited to put this episode on out. I just want to thank both of you guys, Tuom at Collector Crypt, Svi at BAXUS. Go check out their platforms. They're absolutely incredible. I've used both before. Until next time, this has been The Trenches. Again, The Trenches for everyone, including those that are in Web 2 and are collectors and looking to try out crypto. Thanks, everyone. Have a great day.
Thank you.